It's speed of money. That's the most important thing. If I stress anything today, it's that we move fast. All right, so we're going to talk hard money, but first I'm going to talk about my background, because obviously I want you guys to know what I've been up to, and why I'm in front of you today, but also because it's relevant to the topic. I got into the business of hard money lending in the exact opposite way most people get into real estate or real estate lending or flipping. So yeah, I've been in real estate for 25 years. I started out getting trained in institutional multifamily. So I financed anything from a 200-unit apartment community in Santa Monica to a high-rise, 100 million in downtown Manhattan, and doing all sorts of different types of projects with institutional investors. You know, the biggest REITs, the folks at 30,000 apartment units. I was the lead underwriter with a national originator that just, all they did was crank volume and for crazy number of units. So it was really exciting to be a part of it. You learn really how to underwrite multifamily properly, and cash flows and all that goes into that, which we won't get into. But to me, it's the training ground to be a really good underwriter. And I use that to parlay into the ownership side of the equation, I call it, like where I had 6 years, 7 years of debt experience underwriting these projects. I wanted to really learn what it takes to own real estate, what it's like to manage debt from the other side as an owner. And I became the capital markets. I ran a $1.7 billion debt portfolio, which consisted of about 50 hotels, I want to say about 2 million square feet of commercial space, a couple thousand apartment units. And in that time, I was also doing acquisitions and development. The financial crisis hits, right? So we're talking 2010, 2011, the market just implodes. It was scarier than what you'll read about, honestly. I mean, I walked into a couple conference rooms where the brokers were coming to us from banks saying, buy this package of 5,000 homes. We'll get rid of it for 50 cents on the dollar. Like, it was wild. The banks were failing. Everything was worth nothing. And in true form, the CEO of my old company, who was much like a Warren Buffett type figure, said, we got to be greedy when everybody else is fearful. And so what did he do? He pulled me into his office and said, listen, we're seeing basically all hell break loose in the markets. Let's go out and buy 1,000 houses. I've never bought 1,000 houses. I don't even know how to get you there, but that sounds like fun. Let's do it. And initially the package came to me in California and they were like, let's go buy all of these 1,000 houses. And we're like, we can't manage on opposite coasts a portfolio of 1,000 houses. Never mind buy them, renovate them, lease them, and position them ultimately for sale on the other side. So we started to do it in our backyard. And I ran what was TPG Residential. We raised high net worth capital and we went out with $10 million of debt. I had local attorneys. I formed a brokerage company to complement this residential platform that was raising capital to buy houses. And then I partnered basically with a design, and together we went out and bought. At one time, I was buying 20 to 25 houses. I think I closed in a month. We had about 40 houses being renovated, and I grew to about 125 houses under management that had been renovated, leased between Rhode Island, Mass, and Connecticut, coupled with brokering and selling real estate as these guys were buying for me and on my behalf, with what at the time I didn't realize was a buy box. We had a box that was, you would think it's crazy, but if you can imagine, buying houses for 125,000, renovating them for 25 to 50, and then leasing them for 1,500 to 1,750, and making a 10% unlevered cash on cash return. And we could have bought countless properties. I could have bought, like, no joke, 1,000 houses. I was looking at going down to Florida and I was sitting in front of a computer and there were hundreds of properties being auctioned. And it became so overwhelming. There were so many houses to buy that I came back to New England and said, we just have to continue to buy through it, or we have to lend to get scale. Believe it or not, you could have all the money in the world, but even then, when houses were hitting the market, banks were selling off like you wouldn't believe. We still had trouble buying properties. We were losing deals to folks who, much like you, were investors, maybe with one house, two houses, you've never flipped before, but you were backed by a hard money lender that was backing you, financing the project, and was able to position you, an investor, with capital effectively that was like cash that allowed you to compete with us, the big behemoth, the $3 billion company that wanted to buy up all the houses. It was the Blackstones doing it nationwide, and they've turned into lenders themselves through the same exact process I found out later in the years. But the reality is I got into this market because it was a way for us as a company to get the scale. I needed to get to 100 million. I needed to show this company that this division could be what it needed to be. And to do that, I couldn't go out and buy houses. I had to go out and lend. And that's the reverse of what most people, how they get into this business. But I find it interesting because it really does have to do with scaling. And scaling for us in my past was about being able to lend to all of you folks, to be able to see more deals, to be able to have borrowers buying and renovating and to get scale that way versus to go out and either buy off-market properties, which we didn't have to worry about then. You know, we could literally just search MLS. I would, no joke, on a Monday, I'd get a list from one of my guys and they say, listen, we got 15 or 20 houses to go look at in this market in Connecticut. We've got 15 to 20 houses in Rhode Island, and we got 15 to 20 houses in Mass. And I could have just bought as many as I wanted to, except for the fact that ultimately I was losing bids because the banks, which was good, they were positioning deals to the end users, the mom and pops, the folks who maybe would end up living in it. And that made it hard for us to scale. Coming into the hard money space from the ownership side, trying to, again, lend and shuffle paper versus owning and operating real estate. So enter hard money. Banks were over-regulated, right? Banks, after the financial crisis buttoned down, Dodd-Frank, everything came into play. And ultimately, you know, investors had two options. They had cash, which is what we thought we had tons of, and that would help us, or hard money. And as I was saying, I pitched to the ownership group that we should be out lending to these folks. And by 2020, I was backed by Goldman Sachs. I had a $100 million facility, and we were lending throughout New England. What hard money is it's the purest form of lending. It's speed of money. That's the most important thing. If I stress anything today, it's that we move fast. And scale is about speed. It's about you being able to execute your strategy without the friction of a lender standing in your way.